Today, I'm going to be tackling a huge subject: how to get rich on Wall Street, how not to lose. I'm going to break down some thoughts on that based on some questions I've been getting from you guys on how to become more consistent, how to stop losing. Believe it or not, I'm going to shed some light on this path. And yes, anybody can find their way to successful profits if they know how to get there. And some folks do not know the basics, and I'm going to lay out some of the most important, simple details which could absolutely change your view and give you an aha moment of how to become rich on Wall Street. It's not clickbait, folks. This is a genuine and sincere effort to help people put the plan in place, which is going to make the difference. Before I get into that, I want to talk about what happened to the bull rally. On Friday, we had a massive green candle, a reversal off of the lows. We broke a 4-week losing streak, a gap up, and a big high volume buying day on Monday. And today, things have really kind of slowed down. We had a doji candle. We actually had a small red candle most of the day, which slowly towards the end of the day turned into a little green doji. I'm not even sure how the day is going to end, whether it's going to be red or green. I'm going to go into the SPY. I'm going to give you guys what it is I'm watching for. I'm going to compare what the current price action and momentum of the SPY looks like after we had a 10% correction from some previous moments in which we had corrections and responses. We're going to look at the MACD, the RSI. I think it's going to be very informative to you. I'm going to give you an overview of what exactly I'm doing and what it is I think the market will do here by the end of this week. I'm going to give you the lines in the sand. I think it's going to be very helpful to you guys. We're going to talk about some hot plays. This is the Stocks with Josh show. Thank you for smashing that like. I know that there are people out there that desperately need help and desperately need better understandings of what's coming next on Wall Street. I've got that for you. Hit the subscribe and the all notification bell and join the fam. Now, I want to make some very important points about the trade setups that I gave in the Stocks with Josh Discord. Tesla had an incredible move today. We actually profited from puts to the downside right at the open, and then in the reversal later in the day, it was very easy to ride calls higher. We traded MicroStrategies for the last 2 days and we made great profits. Today, it was calls again to the upside. MicroStrategies showing a huge amount of success. I gave a trade setup for the SPY, but guess what? It didn't trigger. And guess what? That's really good news because you don't want false signals. Today was an indecision day, and so I would expect it not to trigger because there was no breakout. There was no breakdown. It pretty much just moves sideways. In addition to that, later in the morning, I gave a setup for Costco. I talked about it rejecting at 928, and you could have easily taken puts at that specific price point down and gotten 30% win twice, because twice it fell beneath that number and twice it produced exactly a 30% win on puts. In addition to that, we have in the Stocks with Josh Discord an AI bot that signals its own breakout or breakdowns, produced a 28% win. I went into the options and determined that based on the percentage move gotten after the alert, if you had entered on the alert, you could have produced a 28% win. Now, we're not rehashing these just to talk about their accuracy and what it is I'm feeding the family every day. I want to make a point about these percentages that were gotten following the trade setups blindly, which means you don't even have to think about it. Each of the trade setups did not produce any false signals, and all of them produced wins, the ones I created and the ones that my AI bot created. And I'm going to recap what those percentage wins were so that we can make a very important point about how to create a proper trade plan that guarantees consistent profits on Wall Street. Now, there's no guarantees, but I'm going to make some points to you about if you have the right trade plan, how can you consistently grow your account? Now, I know what a lot of beginning traders are doing. I know the mistakes you guys are making because I made them all on my journey. There's nobody who is smarter than you or more enlightened than you or begins with a better edge than you. Everybody begins their journey trying to trade Wall Street, making all the same mistakes, dealing with all the same emotions of greed and fear. the path is extremely common. And that's why I'm trying to shed some light on how I got through all of the roadblocks and the pitfalls to a point of better profits. It was having a realistic trade plan. Now, I'm going to break down here some trade plan ideas for you. Now, the first one's not going to be realistic, but it's actually very much in line with what I'm doing. Now, what I'm doing is not what you should do. And the risks that I'm taking are not the risks that you should be taking, especially if you're a beginner. But I'm going to break this down to you so that you can kind of see what the potential is. And I'm going to break it down in a way that I'm doing it, and I'm going to break it down in a way that I'm not doing it, but just to illustrate the power behind having a trade plan and knowing where you might end up. Some of you have no idea where you're even trying to end up. You just want the account, the portfolio to go green, and sometimes all you're seeing is red when others around you are making money. So let's talk about my trade plan, okay? I'm just going to go into some minor details on it, okay? $20,000 risk position. Now, you could have more money in a trade account. Again, none of this is a recommendation for you. We're just talking about numbers here, examples and hypotheticals. So you could have whatever you want in your trade account, but let's just say that you decided you were going to put $20,000 to risk on each and every trade setup that I create, that I was going to do that. Now, if you only got a 20% gain on that $20,000 risk, that would produce you a 4K win on the day. That's $4,000 won each and every day. Now, if you did that consistently and you never risked more than $20,000 and you always made at least 20% and a 4K win, you would be $1 million trader in the course of 1 year, okay? Now, right away, people are going tilt, tilt, tilt. Just bear with me. I'm going to make a point. I'm going to bring it to a more realistic scenario here in a minute. But before we get more realistic, I'm going to get crazier. If you were actually to take that account and you were to compound every win, you say, well, why would you want to do that? Well, just for hypotheticals, let's look at a scenario where you did that. You took that $20,000 that you risked. You're going only for a 20% win every day, and you were to compound it so that everything you won, you re-risked the following day. And this is kind of a crazy scenario. I just thought it was entertaining when I was crunching numbers. You could actually turn your trade account to 3.38 million? No, actually billion. It just shows you the power of understanding what the plan is, what the goal is. Have I ever known or heard of anybody doing that? No, I haven't, okay? Because I can tell you human nature is to get off track constantly. But some of you have never put a plan together to begin with. So let's go through some other scenarios that might be a bit more realistic. Believe it or not, if you didn't get a 20% win, but you put $20,000 to risk every day, and all you got was a 3% win, okay? You could still turn your money, if you were compounding it, into $1 million in less than 9 months. Okay, that's kind of a scenario I just wanted to show you that the more money that you're working with, the smaller the percentage goal has to be to reach the larger goals. Now, we're still dealing with the hypothetical and the somewhat unrealistic. This is not anything I'm recommending. Let's go to our first scenario where we're not compounding anything, but we're going to lower our percentage point of profit drastically to see where we might end up, okay? So our starting capital in this scenario would be $20,000. Our target profit is going to be $100,000. It's going to be 6 figures, okay? We're looking to turn 20,000 into 100,000. We're not compounding, and all we're going for is a 2% profit. Now, we started with 20, we went to 10, then we went to 3% profit, and now we're at 2% profit. And yes, if you were to only get a 2% profit on your $20,000 that you put to risk every day in the course of a year, you would turn that into 6 figures, $100,000. Now, I'm going to make this point a couple times while going through these scenarios. These are not recommendations. In addition to that, we're not yet exploring the type of losses that you could incur. I'm just wanting you to primarily see that the majority of people that are trading are often putting their entire account balance at risk anyways, often watching it bleed away 2 to 3% a day, because they haven't even really devised a strategy to attempt to always lock in the same loss each day and to always lock in a reasonable profit scenario and understand that it actually doesn't take that big of a gain to get huge results over time. Okay, so let's look at our third scenario. Now, this is a scenario where you have $5,000 starting capital and your goal is to get a 10% daily win. There's no compounding here. The daily profit on a 10% win off of $5,000 would be $500. And yet again, you would turn that into a total value account of $131,000. So this is probably getting to the closest scenario that should begin to create an aha moment where you have $5,000, you're looking for a 10% win, and at the end of the year, you have $131,000. Now, as I said to you, as I went through the trade setups, they had win scenarios. Let me just recap them. Today alone, we had a 67% win on Tesla. We had a 48% win on MicroStrategies. We had two 30% wins on Costco. We had a 28% win on an AI bot. All of these, if they had been followed completely blindly on the cross of price, produced way more than a 10% win. So, first point, have a realistic take profit scenario. But let's entertain an idea in which you lose a lot. You actually lose more than you win. Okay, you lose 3 days out of the week and only win 2 days out of the week. In this scenario, you have $5,000 starting capital and you're going for a 10% daily win. 2 days a week you win and 3 days a week you lose 5%. So you have a set loss scenario that you're willing to accept 3 days a week and you're only shooting for a 10% win 2 days a week. Now, in this scenario, with 252 trading days in a year, you end the year with 17,500. Now, none of these are meant to be specific trade plans for you. All of them are meant to illustrate that some of you don't have a trade plan. And in some cases, you have all your money in your trade account at risk anyways, but you're not managing it in such a way that you're controlling the risk and you're attempting to compound or to produce a realistic profit, that you have a trade setup that you're sitting there attempting to manage from day to day. Now, this also assumes that you have the time to trade. Now, if you don't have the time to trade, well, then you're not trying to trade it this way. You've got to employ a different strategy, but you're going to really use similar ideas. You're simply going to trade different setups, okay, which you can also get from the Stocks with Josh Discord. Some people use my breakout scenarios, but they use them with more time and have actually seen the same results. The fact is, you can enter these trades with a stop loss, and as I said to you before, you're getting much bigger percentages than you really need to have long-term consistent profits. The key takeaway is, despite suffering more losing days than winning days, the larger gains on winning days still produce a solid 150% increase. And the conclusion is, you're losing or you're not reaching your goals because you have no plan whatsoever. Give it some thought. Let me know in the comment section what you think about what I'm saying. You have the same risk of having all your money in play, but no strategy, no game plan. Let me throw out an idea to you. This is what I do, okay? If I have $20,000 into a play, right off the bat, I can sell half at 10%, or if it seems very strong, I might sell half at 20%, and then I can hold runners and get a higher percentage. No strategy produces inconsistent results. Okay, that's a lot to put out there, but let's get into the SPY, because I want to give you my bullish signal case for the SPY, the cautious flags I see. I'm going to give you a price action forecast for right now and the end of the week. I'm going to give you my trader playbook plan for the SPY right now. And I'm going to look at a chart from the bear market past. We're going to be going to the past to get signals for the future. Let's jump into those charts. We've got a grid area of resistance. Really, we dropped beneath this area back here, which is where all the consolidation was in the past. And we had this move down. We got that full 10% correction. We've actually been slowly moving up. And believe it or not, this was not the tough area. This area between here and 575 was actually the very easy reversal area, because now we have to begin to fight through this area that had previously been support, and now it's going to act potentially as resistance. And so the areas I've got marked on my chart are definitely going to be the areas where each and every time we hit these price points, we're likely to get rejected. 575, that's where we slowed down today. 580, that's where we would have trouble if we got a little higher. 585, and then ultimately 590. Now let's go over some of the bullish signals on this chart. Down here, we had a beautiful crossover on the MACD. This is always very bullish. This is where we've got the blue line, which is the MACD line, crossing the orange line, which is the signal line. This signals a potential reversal, and indeed, we got a reversal. Once you look at momentum, then you need to look at strength, and after that, the strength is indicated by the volume, and you can see that as we've been moving higher, the volume bars are moving lower, which means that as we climb, the market is somewhat losing its momentum or its interest in moving higher. People are beginning to lock in a little bit of profit, okay? Now, the other bullish signal that I want to highlight for you guys on this SPY is down here where we got oversold, right? This often can lead to a relief rally when things get oversold. We did that here, but the big thing I need to caution you, this is the caution flag, is that relief rallies typically run till they get back to the 50% mark on the RSI. This is sort of the line in the sand. The bulls operate above the 50% line and the bears have dominance below. And right now we moved up pretty strong from the recent bottoms to our first area of resistance. And now we're at resistance on the momentum chart. And so these are all the things that represent the bullish and the cautious signals. So let's talk a little bit about how tomorrow might go. Well, at the moment, I'm assuming because we slowed down that we could actually have a little bit of a pullback before going higher. So I'm expecting tomorrow to open flat or slightly red. Now that could change very easily on a single tweet or statement from the president, and it could change quickly, and we could break right above 575 and be on our way to 580. So anything could happen, but apart from a catalyst statement by the president working out something with tariffs, I'm expecting that we may pull back to 571, 572, and we're going to need to see how that price point holds up. If we break through it, then that's going to tell us that we're going to have a stronger pullback, that the market is going to be in a choppy place until we get more data. And as I mentioned to you guys, what that data would be, it's the CPI read for March, which is way out there in April. On April 10th, that's when the market's going to have a better understanding of whether or not the Fed can afford to cut. It's either going to come down to the Fed cutting or this tariff war ending. Those are the big two market drivers, along with the sentiment and some other reports that are coming out. But let me take you back in the past on the SPY and show you where we've been in a similar place and what happened then. How did price action perform when it went through the gauntlet of moves that we've recently gone through, when it went through a full 10% correction and got oversold? What happened next? Maybe it could give us some clues as to what we might see next in the SPY. Let's go check it out. All right, we're going to go back in time and we're going to look at the SPY back in October of 2023, this period of time between October 26th and the 31st. This is a similar point in which we had a full 10% correction. We actually did a greater than 10% correction, which means we could also do a greater than 10% correction here. Now, you remember the yellow grid work that I had. We can see that at the time, when it fell beneath this price point, the stock price continued to fall, but eventually it came back and back tested this same price point, and it spent a handful of days there. So that would be very similar to if we spent a handful of days fighting out between, let's say, 572 and 582, which I think is very realistic right now. After that time, barring any new catalyst event to push the market higher, this had moved up around 4.5%, only to then lose momentum and move down 6% from that pivot point. Now, here's the part that I wanted to especially point out to you. We at that time also had the crossover on the MACD, but were beneath the zero line, meaning that it was still in bear territory. And it finally got oversold, very similar to what had happened to us recently. And the price moved back up to the 50% mark, which is where we're at right now. And we've actually had a full 5% move, but back then it was just about 4.5%. We've got a 5% move from being oversold to our middle point today. But back then it moved up to the 50% mark, which I've reminded you is bear territory, only to then get pushed back down and have to get oversold one more time, making that lower high that eventually led to the SPY ripping and moving outside of that bear territory correction and moving higher. Now, we've been in a bearish trend. We don't have the catalyst confirmed to fully get out of this and rip. Now, anything could happen at any time, but as I've said before, the president is looking for rate cuts that the Fed doesn't want to give because inflation's too high. So you can't expect that type of thing to work out very quickly, which means that if we get rejected on the daily chart of the S&P 500 at the 50% line on the RSI, we could easily drop an additional 5 or 6% from where we're at right now, making that lower low and picking up that additional full-sized correction. So I'm not saying any of this to freak you out. We're still in a reversal from the downside, and the market can continue to climb. And if you ask me exactly what I think would happen, I think it would be more likely that we're going to be in a choppy place the rest of this week. We've got the GDP on Thursday, and it's more likely that we would actually reject at 582, okay, before ultimately going lower. And if the market copied what it did back in October of 2023, we could easily spend the rest of the week in this general trade range before potentially the market choosing to go down. I don't know which direction the market will go. I'm just sharing with you what I see in the charts and what it is I'm watching. Watching those things will help me make better trade decisions and give you guys better trade setups. All the trade setups gave you better than 10%. And truthfully, as we examined in our trade plan, you don't need more than 10% to become a millionaire on Wall Street. But what you do need is you need a decent trade plan. I give those. And you need a ton of discipline to practice them each and every day and to control your risks and to have a realistic take profit. That's what we talked about today. Let me know if this has helped you, given you some insight or perspective or an aha moment, or shed some light on the path that could actually lead to you no longer trading your time for money. Some people aren't in a position where they can do this every single day, but you can do the same thing a little slower with swing trades rather than scalp trades. This video is about scalp trades and how quickly they could lead to big profits. Let me know if this helped you. Hit that like if you enjoyed the breakdown today, and hit the subscribe if you need more of it. We'll see you tomorrow. I'll see you in the comments section. Peace and blessings. Don't sleep on the Stocks with Josh Discord and the trade setups I'm going to be giving you guys tomorrow. Lots of cool updates coming to the Discord community. It's only getting better. Appreciate you all. Talk to you later. Bye-bye.